Prices and herd numbers. These are factors that will be driving the cattle markets in 2011. We have more in this week's Market Watch.
Market Watch.
Joining me is Kevin Good, Senior Market Analyst with CattleFax. Thanks for coming to the show today.
Thanks for having me, Kevin.
You know, we've seen cattle numbers on the decline over the last couple of years, really. Can you tell us a little bit about what are the forces driving that?
There's a lot of factors, Kevin. If you think about it, beef cow numbers in the United States have declined 13 of the last 15 years, so it's been a long-term trend. You know, there's profitability issues, especially over the last 4 or 5 years with escalating input cost, weather patterns. We've been in a drought in one area or the other in the United States the last 10 years. Alternative land uses is a big factor, as well as the age of the producer and just the equity requirements it takes to get into the cow-calf business. Now, with these declining numbers over the last 15 years, combined with increasing exports, especially over the last 3 to 4 years, per capita supplies are the tightest they've been in the last 50 years, Kevin. So we've got a pretty bullish situation out there.
Well, I was going to ask you, with these tight supplies, boy, these sales have been on fire the last couple of weeks. Do you anticipate these record high prices to continue? Kevin,
I think we have to. You know, as you would think about it from a price level, fed cattle prices in 2010 averaged $95 a hundredweight. You know, we're under the impression that's going to be, 5 to 10% higher this year, and for some very fundamentally good reasons. Tighter supplies, we think continued exports. The domestic demand picture is starting to turn around as the economy, even though it's slowly rebounding, it is rebounding. We're seeing better interest at retail. We're seeing better sales at food service. So the combination would suggest that higher prices are going to continue.
Mm-hmm. What do you think are the prospects for profitability and just overall industry expansion in 2011?
You know, profitability, I think segment by segment will be different. The cow-calf producer, we would expect sharply higher calf prices this year, and because of that, the cow-calf producer probably over the next couple of years is going to have a pretty good go, despite the fact that we're going to have increased input costs. If we looked at some of the other segments, especially the feed yard segment, where that's a margin business, their input costs, both feeder cattle and grain, are going to be quite stout in 2011, so their profitability prospects probably aren't as good this year as they were last year.
You know, we've been putting a lot of heifers in the feedlot the last couple of years. What, in your opinion, are the prospects for cow herd expansion over the longer term?
You know, I think, Kevin, as we look at it, and it's probably going to be a couple-year process here. We just have to get that calf market to high enough levels that the economic incentive is there for that cow-calf producer to go ahead and start to expand. So, we think it's going to happen, but it might take a couple years. We've got to stop liquidating first, and we're starting to see a few of those signs. The cow liquidation rate or harvest rate over the last 30 days is starting to slow down. So we think as we go forward in 2011, it's probably a year where we stop liquidating. But as far as expanding, we might be in a 2 or 3 year pattern before we really see some of those signs.
Very good. Well, I really appreciate your perspective. Thanks for coming.
Thank you, Kevin.
For more information from CattleFax and their expert analysis, visit their website at CattleFax.com.